What usually happens with the real estate market during an economic recession? Let's find out. First, we have to address what is a recession. Like, the word is thrown out during every market shift or even a minor change in the economy. And half of the time, we don't even know if we're in a recession or not until it's several months into it. By definition, a recession is defined as 2 consecutive quarters of decline in our gross domestic product, otherwise known as our GDP. And recession is usually decline in our economic output, consumer demand and spending, followed by high unemployment rate. So as we're sitting here in November of 2022, we're seeing a decline in our GDP. However, there's still a balance between consumer spending depending on what sector it is. And the opposite of most recession, we're actually seeing a low number of unemployment right now, hovering around 3.5%. Today, we're going to talk about 3 trends that you're likely going to see to the real estate market in an economic recession. Trend number 1, banks will start to tighten their lending restriction. Alright, typically during a recession period, banks are more cautious on the loans that they're lending out to borrowers. Since the financial crisis of 2008, most banks are afraid of loan default or borrowers are unable to repay their loans. Banks know that there are higher chances for some people to lose their job in an economic recession or just make less income during this time period. Realtors. And these factors can put pressure on the borrower's ability to repay the loan. Oftentimes, banks will become more strict with regards to their lending requirements, such as increasing the borrower's minimum credit score for a home loan, asking the buyers for additional down payment on a certain loan program, requiring borrowers to pay down their current debts before the bank would consider giving them a pre-approval letter. We purchased a home a few years back, and one of the requirements that the loan underwriter wanted for my wife and I to do before they could close on the home loan was to completely pay off the balance of our car. We had about $12,000 remaining on the balance of that car. So the underwriter said, for you to qualify for this home loan, we need you to pay off that car payment and get rid of that $450 a month car payment ASAP. This is an interesting fact that will help correlate trend number 2 and 3 that we'll talk about. And this is an article from Reuters. As of September 2022, building permits for single-family residents have decreased 10%. Interestingly enough, permits for 5 units or more, in many cases multifamily apartments, have increased 28.6%, which is one of the highest since 1986. The second real estate trend that we may see during an economic shift or recession, the cost of rent is going up. Yes, rent may increase for current home renters. Like many of you that are watching this video, years ago I was wondering the same thing. Why on earth would rent go up during a recession? And here's why. As we mentioned, banks will begin to tighten their lending requirement, so as a result, this essentially makes it harder for a home buyer or potential home buyers to qualify for a mortgage loan. Combine that with the current interest rate situation where it's doubled since this time last year, simply the demand for home purchase will go down. As a result of rising mortgage interest rates, there will be less home buyers that can now qualify for a home loan. And because of that, most of those buyers will go out to rent or continue to rent their existing place. Therefore, this will increase the demand for rental homes or rental units. After all, those potential home buyers still need a place to live and will essentially rent or continue to rent rather than purchasing a home. So as demand for rental units increase, rent tends to stay relatively high or could even rise during an economic. Real estate trend number 3. The third real estate trend that we often see in an economic recession or a market shift, home builders will slow down on building new construction homes. Every time we're considering buying something such as a sweater, a car, or in this case a home, most of the time a brand new item is going to cost more than an older or used item. Same goes with a brand new home. A brand new home with similar features in the same location will most likely cost more than a resale home. For example, you have 2 homes that are side by side, similar square footage, material, finishes throughout the house. Realistically, the new home is going to be more in price than a resale home that's 10 or 20 years old. That's a fact. Builders are simply afraid to start new construction projects because of this uncertainty in the marketplace. I mean, most home builders don't want to build new homes in case they can't sell them to the buyers, especially in an economy where the mortgage interest rates are rising and home affordability is lowering every day. For instance, if you have a similar home, let's say a 3,000 square foot house, and it's in the same location, two homes in the same location side by side, similar in all of their features, realistically, the new home will be more expensive than the resale home. Once again, thank you for viewing this video. If there's any other questions you may have with regards to buying, selling, or investing in real estate, feel free to reach out to our team privately. We'd be more than happy to help you and your family and everyone you know. Thank you again. Have an amazing week and stay safe, live well, and take care.